Hey, I'm Gene Goldman, and here's a look at the week ahead. Well, last week we had a roller coaster ride in the stock market. Midweek, markets were shocked by stronger than expected inflation. This increased the probability that the Fed would raise rates 1% at its next meeting. Then Friday, we saw a strong retail sales report and consumer sentiment surprised on the upside. This is great news for the economy, but long-term inflation expectations within the sentiment index actually dropped. With this in mind, markets reduced the probability of a 1% rate hike for later this month. This week, we hope this momentum continues. No Fed speak, and the Fed is in the blackout until its meeting on July 27th, but we'll focus on two key things. Number one, we'll get more economic data. We're going to get lots of readings on housing, including housing starts, existing home sales, and the NAHB Housing Market Index. All should reflect a modest decline from prior months. This reflects higher mortgage rates and less consumer confidence. Housing, as we all know, is a very interest rate sensitive segment. The good news is that inventories, as you see here, are very low coming into this recent weakness. The second thing we'll learn this week is the second quarter earnings season continues. Last week, we saw banks had some mixed results. This week, we should get a broader picture of the economic picture. We'll get lots of tech bellwether companies. And the most important point for this week is that we'll get clarity around, have expectations been lowered enough for earnings? In other words, have all the bad news been factored in earnings enough? On the positive point, last week we saw companies that did miss earnings expectations. Most of them did rally despite this bad news. Good news there. Thank you for listening. For more information, please follow us on Twitter at CeteraIM. Thank you and have a great week.